Bank of England's Monetary Policy Committee have met today, and again we have a base rate hold at 5.25%, the highest in 16 years. This was widely predicted, so not much of a surprise to many, but what are the implications on the economy and mortgage rates going forward as a result of this? Stick around and find out. Welcome back, and as I was just saying, the Bank of England's Monetary Policy Committee have held the base rate yet again at 5.25%. This was widely predicted, as I was saying. Now, before we get into the nitty-gritty of this and what's happened and what the implications are, don't forget to hit the subscribe button if you haven't already. A large proportion of you are watching these videos but aren't subscribed. It makes a huge difference to me. If you are subscribed, it really does help me grow this channel. So if you are enjoying these videos, please do me a massive favor, hit the subscribe button and also the little like button down there, as this also helps as well. Now let's get back to the video. Now, many are complaining that the Bank of England is being a little bit obstinate when it comes to the base rate, not bringing it down, even though we did see that the inflation rate came back to 2%, which is the target, of course. And that this sort of represents that the Bank of England, are not really doing things in the best interests for the economy and the country. I tend to disagree. I think this is a good thing that we're holding the base rate for now. We've got the general election just coming up, which is going to probably add a little bit of volatility to our market. So we want to make sure that economically we have got a little bit of stability over the next couple of months. We did, however, see that the Bank of England's Monetary Policy Committee, made up of 9 members, voted 7-2 in favour of holding the base rate, which is the same as last time. But when we delve into the nitty-gritty of the minutes of the Monetary Policy Committee meeting, we can see that there is a clear intent from those that did vote to hold that we're not too far away from then shifting over to wanting to reduce that base rate, probably by 0.25%. So the next meeting on the 1st of August is going to be an interesting one. What are the implications in the mortgage market? Well, of course, it's not great news for those that are looking to refinance over the next couple of months. Rates are not really going to change all that much. And those that have been on really, low rates for quite some time are going to get that rude awakening. I'm saying to all of my clients at Grand Union Finance that have refinances coming up to speak to us sooner rather than later, so we can really start planning for this to happen. Most of our clients are buy-to-let investors, and if your rate is going to go up, it's going to have a huge impact on the cash flow that you make. If your rent hasn't gone up substantially in the last couple of years that you're charging your tenants, if your mortgage rate goes up, that's going to reduce the amount of profit that you make. So it's really important that you get ahead of the game and get a real clear understanding as to what you're likely to be getting in terms of a rate. Now, although there's a lot of doom and gloom about this, I do actually think that even if we did get a base rate reduction of 0.25%, that wasn't necessarily going to be seen straight away in the mortgage market as an overall reduction in that rate. So the reality is that we might have seen a 0.1%, 0.2% decrease across the board, but this really is not going to have a substantial difference, the substantial impact on the overall cost of a mortgage. It's not going to have, or wouldn't have had, a big substantial difference or change in the property market and the affordability of first-time buyers and home movers to actually buy property and move. So the reality of it is that even if we did get that base rate reduction, it probably wouldn't have a huge impact on the property market and the cost of a mortgage, to be perfectly honest with you. Now, one thing that is positive is that this rate was actually, or this decision was predicted. And whenever we get predictability in our market, that is actually a good thing. It was predicted yesterday that the rate of inflation would come down to around 2%. That happened. It was predicted today that the base rate was going to remain at 5.25%. That happened. And it's important to understand what the positive implications of this are. We've seen that the pound has improved a little bit against the dollar and the euro, which is a really good sign that the international economic community are starting to build a bit more confidence in the UK economic market. And it also means that the swap rate market, which is the rates that lenders use to lend money to one another, are going to be less volatile as a result. The more volatility we see in that market, the more likelihood we are to see mortgage rate rises on the whole. So those two things are massively positive, and I think that over the next couple of months we're not going to be seeing any increases in mortgage rates on the whole, so at least that adds a little bit of predictability to what's going to be going on. The big question is, of course, is the Monetary Policy Committee going to vote to reduce the base rate in August? I'm actually still on the fence with this. I'm not sure. I think there's a lot it can happen between now and then. We've got a general election. Depending on whether we have a change of government or not, could also have an influence on what the Monetary Policy Committee decides to do. If there's a change of government, that would lead to a little bit political instability, which could then mean that we want to try and keep economic stability for a little bit longer. Also, it's going to be really important to see what happens with the rate of inflation next month when that is announced, because if we see that go back up, that could push the Monetary Policy Committee to hold the rate yet again at 5.25% on the 1st of August. But what do you think? Let me know in the comments. Do you think that the base rate is going to come down in August or not? Let me know why you think that would be, and also the implications of what you think is going to happen on the market as a whole. Thanks very much for watching this video. Stick around because YouTube is going to, in 2 seconds time, make a recommendation of another video of mine that we think will be interesting for you. Catch you on the next one, and don't forget to subscribe. Cheers.